All right. Scott Galloway, 80s test. This is one of the funniest things that I never heard this before. I wonder if he made it up. He's talking about disruption to banks, which I want to get into with you guys. But this is the 80s test. This is Scott. Put yourself smack dab in the center of the store, product, or service. Close your eyes, spin around 3 times, open your eyes, and ask if you'd know within 5 seconds that you were not in 1985. Theaters, grocery stores, gas stations, dry cleaners, university classes, doctor's offices, and banks still feel as though you can run into Ali Sheedy or the Bengals. Is that reference? That you're too young for that reference.
I did make a note. I don't know who Ali Sheedy or the Bengals is.
You're better off.
But this kind of, theaters, I went to a theater or two when I grew up.
I only got the Bengals reference.
You got the Bengals reference.
Yeah.
Okay, you're right on the tail end of who should even know what that is.
Yeah.
Okay. So yes, most bank branches you walk into, if you took the 80s test, you would have no idea what year it is. And so what he's pointing out is those are the types of businesses that are most ripe for disruption. Are either of you guys using neobanks? I know you are. You're using Marcus? Is that considered a neobank?
I wouldn't consider that.
No, it's a bank.
It's a bank. Well, it's connected to Goldman
Old
Sachs.
banks. Yeah.
Would you put your money in an app?
Yeah, I don't have a problem with adopting early technology. I would avoid Chime apparently, which we'll get to. But I still use traditional banks.
So Galloway said it's hard to imagine an industry more ripe for disruption than the business of money, and man, is he right.
Yeah.
John, throw this chart up. So we've got Fintech just raised $30 billion. 1 out of every 5 venture dollars in Q2 went into Fintech. This is remarkable. We went to, was it like a Riskalyze conference in 2014? It's like a Fintech conference. Benzinga, that's right. And I thought, this is a joke. What is this Robinhood? What is this company? And that was many hundreds of billions of dollars ago for fintech funding.
Right.
And I got to say, I'm thrilled with this because I am trying to refinance my home for the last 6 months, and it's an absolute nightmare, top to bottom.
Really?
They're asking me about specific charges and bank transfers, and not giant amounts, but oh, I see you went out to dinner last Thursday. And I'm why is that relevant? I called my broker and I said,
what? This is in the middle of a loan.
I'm making up the dinner part, but other than that, we should be.
If you moved $1,000 from your account on a wire out, they'll ask about that.
So I called them. I said, honestly, I feel like the bank is trying to lose me as a customer. And if you ask me, I'm done. I'm not giving you any more documents. I've given you the same documents now 3 times. I'm ready to close. You should have been ready to close 4 months ago. This is ridiculous. So I guess they just don't prioritize refi. Obviously, the business is booming. Yeah. They want to do mortgage originations more than refi. I get it. Fine. But there's plenty of room for a company to come in and just kick the shit out of banks.
But can you get that size of a refinance on an app so much easier?
Yeah.
You really think you can?
I really do.
So why didn't you?
I'm not saying I can today.
Okay. I don't know that it's that
You should
simple.
be able to. And I don't want to, I've never dealt with this company, so I won't even plug it, but there are companies that do this.
I refied in the middle of somewhere in the middle of the pandemic. Warmer months is what I remember. So it had to have been July or August or September. And
You and everyone else.
Yeah, in the whole world. And I went with Guaranteed Rate. I've heard of them. I never really, had any experience. It wasn't an app, but their portal and their tech, clearly where they made investment, I would have approached it just like you did, extremely cynical, ready to be questioned on every little thing. Business owner, giant pain in the ass.
Right.
Giant pain in the ass. Show me everything. And it was, with that, having said that, it was actually smooth. To my surprise, I had it nicely organized because I knew what was coming my way, and we're financial professionals. But even then, it was smoother than when we first bought the house.
This was like going to a proctologist. It's 6 months, and I'm still not done.
I'd be very frustrated.
Do you think that they might? Well, I guess 2 things. A lot of different processes for different things have been delayed just due to COVID and people working from home. These are big bank employees that are maybe not necessarily working the hours they should. But do you think that maybe they're making it difficult because they're trying to deter people from doing it?
From what I'm told, they're just insanely backed up. They don't have the staff for this.
I think it's volume related.
So I think that's all it is. But nevertheless, just I'm like, oh, Robin, I need your paychecks again. She's like, again? I feel like this is the 4th time.
But that's the problem, though, that they don't have the people for this. It's too much manual, not enough automated.
Which
is what the fintech disruption is about. why are these subjective decisions? What are they based on?
They keep asking me for the same stuff. I'm like, you have my May statement. I gave it to you last time. And if technology like intervened, they would already know that they already have it. So,
well, that is the frustration with the traditional banking system and why millennials and people in the underbanked and unbanked communities don't necessarily, it's more so than convenience and expense and all the minimum balance things that go along with using traditional banks, is the distrust of the banking system. So that's why a lot of younger people and those, the unbanked communities, they would prefer to use something like
nobody
Cash App
wants
or
them.
Ally or, they want to use something that's young and cool and seems transparent, which we don't necessarily know yet. Except for it looks like Chime is going down pretty hot and heavy right now. But, that's why a lot of people, these neo-banks or challenger banks is appealing to them.
So nobody wants these younger people as customers, which is the opportunity for the fintechs. The only people that want them are people that are going to sell them a horrible insurance policy or a horrible credit card. Like they're just not coveted by the old banks. That's the
I just think they're not motivated to revamp. Yeah, these are 100-plus-year-old banks, some of them. Technology, like how old is the tech? Like my brother actually does technology for a large financial firm. And
probably 20 years old at least.
Oh, I wrote down 40 years old, 30-year-old technology. It is so hard and so expensive. What they do is they just put Band-Aid on top of Band-Aid on, they don't rip
anything out. They build on top of it.
Their Exchange server links to a Domino server. Remember Lotus 1, 2, 3? I mean, I know I'm young, but I'm old enough to know the way it worked. And they just build pipe and connect pipe. What are you going to do? Tell a $40 billion company, hey, all of your tech needs to be completely destroyed and built back up. Yeah, go tell that to the shareholders as you go to make a $4 billion investment in tech and lose 20 cents per share.
I almost don't think that would cost them. Like if they wanted to be, PayPal's $300 a share now.
Yeah,
it's bigger than all of these companies.
But I feel like that was built in the new era, not like the old tech
Yes,
era.
but they have never been penalized by shareholders for making big investments. It's not a hugely profitable company.
Yeah, but you can't compare that to Wells Fargo.
Because the fintechs are valued more as tech companies than they are as banks, right?
Well, I almost feel like there's room for one of these banks to say, we're not focused on profitability over the next 5 years. We're focused on global domination of.
But that's what they're unwilling.
And I kind of feel like that's where Marcus comes into it. Like Goldman's doing something different to try to bring that market in to eventually the wealth transfer. The Marcus clients become the Goldman clients, and that's the smart way to do it from a bank perspective.
If Goldman is able to show user growth with Marcus, that's sufficiently fast enough user growth, nobody would pay attention to the amount they're investing. Like the story would just be users.
I'm shocked that Marcus is not increasing their rate a little bit and using that as a loss leader. Everyone else is giving you 70 basis points. We'll give you 110. Come here, and they'll monetize them elsewhere.
That's what First Republic Bank does, but on the student loan refinance side. It has been the biggest game changer for my household and my clients, bar none. Loss leader, give you a rate that's stupidly below even the SoFis and common bonds of the world. You can't compete against them, and they're going to cross-sell and wallet share you real good. And you know what? I went out to lunch with the VP. I'm like, you're not going to get me, He's like, yeah, of course, you're an advisor, but you've already referred how many clients to us? And we love you for it. And I'm just like, you guys are genius.
Are you in their commercials yet?
Not yet.
Should
After
be.
this show.
25% of U.S. households are either unbanked or underbanked. Half the nation's unbanked households say they don't have enough money to meet the minimum balance requirements. 34% say bank fees are too high. And if you're trying to get a mortgage, you better hope the house isn't cheap. Meaning nobody wants these small transactions, small accounts. They're not marketing to try to get them. So if you built an app, that's your audience. And then the idea is you get really good serving that audience and you move upstream.
Yep.
Which someone's going to do and shock everybody.
It's an opportunity.
So we saw Robinhood do that on the brokerage side. Someone will do that successfully. So maybe somebody already is.
So what is going?
Cash App? I would say Cash App is the one that's primarily in that space, and they're helping people do transactions with Bitcoin. And the king of that is Tyrone Ross.
My good friend, our good friend.
Does he like?
And you guys got to have him on the show because he's all over this.
Tyrone come here every day. We'll do the show. We'll flip the mics on. Is he into Cash App?
Yeah, so
He loves it.
Yeah,
Yeah, he
and so
loves it.
he's a big proponent of it because he talks about like the big B versus little b. Little b being the Bitcoin, big B being the blockchain, and giving people that are unbanked who don't meet minimum balance requirements and all, don't have a great historical credit line or credit record and all of that.
Or no credit record.
Yeah, and allowing them to be able to transact with family and friends without having to go to check cashing and saving all those fees. So I really think, Cash App is doing a huge service to that community.
We're a Venmo household.
Yeah.
I don't know why. Not a Cash App household.
Same here, but only because I think it was. I have both apps, but first, I paid one person once.
I think
in
it was
Cash App.
Venmo, Verizon, and Cash App is AT&T.
I wanted to try. There's Zelle, right? That's what the bank's version of it.
Zelle is owned by a consortium of the banks. It was like
Yeah.
their competitor Venmo.
Yeah.
Nobody's Zelling anybody anything.
I only use Zelle.
I Zelle.
Really?
Yeah.
I've used
Come
it
on.
twice.
Don't ever Zell me.
But the difference with that though is because Cash App you can buy Bitcoin directly and you can use it for exchange between family and friends. You can't do that on Venmo.
And it's a digital wallet too.
Yeah, and it's a digital wallet. It has
PayPal
secure
is not.
storage. So I mean, I don't need to go down the crypto rabbit hole right now, but that's where Cash App has a huge advantage.
Jack
for,
Dorsey.
PayPal is now involved in Bitcoin.
Yeah, but you
They
don't get
bought
it.
some for their balance sheet. They're letting you do something with it.
First thing I did was try and buy cryptocurrency on all the platforms just to see how they were doing it. I thought that could have been a competitive advantage for the companies. PayPal was very easy, but you don't get a digital wallet. You have to transact in their ecosystem. And then you got Jack out there with Cash App.
Why do you
get
want
some-
the digital wallet? Why does that matter?
You can't transfer your Bitcoin outside of PayPal.
So just to be able to hold Bitcoin in it.
yeah,
That's the main
just
thing.
if you want to hold the asset, which
Okay.
isn't, if you just want
No,
to do it, it's
it's
fine.
not.
It's super easy, which
Are you
is
paying
great.
people for things in Bitcoin or not yet?
Not yet.
Are you?
No.
Would you accept Bitcoin for services rendered in any way, shape, or form? I have no interest in doing that.
Maybe not today.
Right. Maybe
But-
Yeah.
maybe someday.
Yeah, someday.
I wouldn't give my Bitcoin to
Well,
someone
that's the other
for
thing.
something.
I'm long Bitcoin. I'm not trading it for.
Why would you do that? I
You're
agree
like-
with you.
You're trading away the fantasy that it's going to go to $1 million.
I need my fantasy.
Well, that's Robinhood
desperately.
too. Like I don't know the difference, the split. Like for Robinhood, for example, I don't know what their asset split is between people that are using it for like day-to-day banking and investing versus crypto. Do you guys know?
What, Robinhood?
Yeah, Robinhood split is between like cash transactions and crypto transactions.
Oh, I would say that it's crypto trading.
Yeah.
I don't even think like
I saw the Dogecoin stat was like 8%. Did you post that?
I forget what it was. I think it was a third of their crypto revenue was from Doge, which is hilarious.
you go.
Wow.
Yeah.
All right,
Yeah.
Let's keep it moving.
We want to talk about Chime or no?
Yeah, what the is going on at Chime? What's wrong with these people?
They sound
I can
like
tell
criminals.
you, I get probably 15 different DMs a day on Instagram with
Really?
fake Chime
Wow.
what's it called, invitations to open an account. So that's when I was reading this, I was thinking a lot of these complaints, I would assume are consumers that open an account through someone else that's a fake Chime, not actually Chime.
Let's
And they just haven't made it through all the complaints yet because Vero and Chime I get consistently. And the fake Vero and
let's
Chime
set
are
this up for
always
people, though.
commenting on.
So here's what's going on. Chime, this is ProPublica. Chime, a neobank serving millions, is racking up complaints from users who can't access their cash. The company says it's cracking down on an extraordinary surge in fraudulent deposits. That's little consolation to customers caught in the fray. So, Leanna, that's what you're saying?
Yeah, and so I think that, of course, there's probably have been some accounts that have been closed for fraudulent reasons or frozen until Chime can figure out, verify the person's identity or whatever's going on, the source of the assets. But I think a lot of this is probably consumers that have opened up Chime looking like, I'll get messages from Chime.1, Chime hello, good morning, Chime. And it shows the Chime logo.
In that.
Yeah, and so people are sending links to people on Instagram or Twitter or wherever, inviting them to get free $100 when you open a Chime account today. I get 50 of them a day.
Why do they have so many impersonators?
I don't know. It's Chime and Vero that I get all the time.
It must have something to do with the onboarding process, it being really easy to open a fake account or share an account with
Yeah.
somebody else. But so, all right, so this gets back to this idea that like banks have thousands of employees. They have thousands of employees just working on things like impersonations and fraud and fraud protection. Chime doesn't have a workforce like that. So when they have an issue and they need to lock down accounts, they're doing that in an automated way, probably across the board. And then it's going to take them a long time to go through, okay, this is real, this is fake, this is
So
fake.
look at this. You go to their website, and it says Chime, banking that has your back.
LOL.
And then on the bottom,
Has
it
a knife
says,
in your back.
like literally, it says Chime is a financial technology company, not a bank.
Well, why? What is the appeal of Chime to begin with? No overdraft fees. Do I have that right?
Yeah,
Is that the whole story?
Yeah, I'm on their Instagram. I got caught up on their Instagram page to see if it was any good.
Doug, while you're looking for that, listen to this stat. Of the 9, what? Of the 9, were you about to say something?
Get paid early, online banking, fee-free overdraft, no hidden fees,
that's the
pay
big one.
anyone, mobile banking. That's like the
I mean, this sounds like
Grand poobah
this is the
of
definition
it
of
all.
you are the product, right?
yes.
So, of the 920 complaints filed about Chime, 197 were tagged as involving a closed account, meaning they're closing people's accounts, which it doesn't sound great. Wells Fargo, by comparison, now Wells is like the poster child for bank complaints. Wells has 6 times as many customers. They have 317 complaints. 317 versus 920 for Chime. What are they doing?
Something's going very
wrong.
Something is going very wrong there.
Yeah.
If that's not a publicly traded company, but I think they were talking to a SPAC or.
Well, they were the biggest before outside of Robinhood. They're the biggest non-public fintech company.
I mean,
but they were probably on the runway to come public. I'm sure they still are.
They probably still are. What's the difference if they pay a $40 million fine?
Yeah, if you're going to come public worth $20 billion out of the chute, who cares?
Yeah, I think that last they were at 15. So
I almost feel like that's a rite of passage for a fintech coming public. It's like, how horrendous was your scandal?
yeah.
And
Did you survive it?
And no publicity is bad publicity.
Well, like Robinhood, when they shut down trading and stuff with the meme stocks, like people lost their shit over that.
They had 5 days worth of market cycle wall to wall talking about Robinhood.
Gained 6 million, customers during that time.
Did they really?
Yeah. While
amazing.
everyone thought, everyone's up in arms, they probably brought in more clientele than.
I
Mark
probably
ever
said
before.
something smart assy like, if I don't tweet anymore, I tweeted this in my head. If Robinhood were public, like how much would it be down? It would have been dead wrong. The trade is buy.
Last thing I'll say is I watched this really weird TV channel called The Wealth of Entertainment. It's like dream cruises and 5-star vacations. I fall asleep to this stuff every night. Every commercial is a fintech, back-to-back fintech commercial, including Dave, including Chime, one after another. So it's kind of weird that we're talking. I mean, it's just that. And the way they advertise their product is definitely downstream. Like I got my paycheck early, so I could buy XYZ. And it wasn't even like buy food. It was like, so my kid could get candy. I was like,
There are too many. By the way, there are too many of these, and they're all raising boatloads of money.
Yes.
They're going to rip each other to shreds.
$30 billion, that latest funding. So,
I have no idea what the differentiator is when I watch like 3 of these commercials back to back. It's the same thing.
Can I sum things up on fintech as basically saying the only thing that matters in the end is cost to acquire a customer, and the more war chests that these companies amass through like SPACs or IPOs, the more expensive it's going to be to acquire a customer. And these are customers who are basically paying you nothing. So I hope you're able to exploit these people.
Well, there's 70 trillion of wealth transfer in the pipeline, so that's what they're all targeting
right.
eventually. The millennials,
That's
right?
exactly right. We're into soapbox. So speaking of, I guess, the pandemic for the last time, I want to just pay homage to the worst call I've ever seen. And this comes from somebody who has 3 of the top 10 worst calls of all time. This is James Altucher. So you guys are probably familiar, you guys listening are probably familiar with something James has said or written.
I'm still not contributing to my 401k based on his advice.
So, right, James became famous for saying things like, don't ever buy a house, don't invest in stocks. He did a really big push, don't invest in a 401k.
Love it.
Like some of the worst pieces of advice, just like speaking like very objectively, because it's not personal to James.
He's anti-oxygen.
He likes
Don't breathe.
He likes to say the exact opposite of what everyone else says.
Yeah, contrarian.
Provoke a huge reaction, and then monetize by selling people altcoins.
And then bury a ticker symbol into his thing.
Dude,
I remember when you were talking about that
Mission
on the
accomplished.
previous.
All right, so
podcast.
Jerry Seinfeld ripped him for this. So it doesn't. I'm not going to do it again. But August 17th, 2020, op-ed in the New York Post. For God's sake, New York City is dead forever. And he definitely got the reaction that he wanted. This is one of the biggest trolls I've ever seen. But it's basically, I love New York, but it's never going to come back. Okay, so here's what's going on. Fast forward. We actually have a shortage of rentals in Manhattan. It's about 11 months after he wrote this post. But let me share this with you. Lease signings in New York City apartments hit record highs in June, leaving far fewer available than is customary at this time of year. With vaccinations underway, leasing activity has continued to rise. Inventory can't keep up. For the third month in a row, Manhattan broke records with 9,600 new leases signed in June, the most since Miller Samuel began tracking in 2008. That escalated quickly. You're a renter in New York.
It's crazy out there.
What's going on?
So
You had to move, right?
the news on the street.
Yeah.
I didn't move during COVID. I definitely negotiated my rent down. But the word on the street is that the West Village is full of early 20-year-olds and it's frat house, and everybody my age in their 30s and 40s is moving uptown.
Okay.
Because the streets
You can't live like that.
it's crazy, but they all, kudos to them. They all moved into the city when it was half the price, 40% less, 30% less.
These
They're
are
all
kids
getting deals.
out of college.
Yeah.
If they're going to be stuck somewhere, they might as well be stuck in an apartment
Out
in
on the
Manhattan.
sidewalks on a patio or something. So they all did it in spring and early this year. But my friends that are now moving back in the last month or so, no deals anymore.
They're in shock at what's happening with some of these neighborhoods.
Like really, it's funny. You walk downtown on the weekend and it is like a street frat party.
So what happened to your building? They're throwing up everywhere.
Well,
Smoking
I live
weed in
on
the
Central Park
stairwells.
South, so I was already with the elderly.
Okay.
So
All right. So you got out. You got
I'm an
out
old
before it
soul.
was cool.
yeah.
Okay. Good for you. I like that neighborhood, Central Park South.
Dog mom,
Yeah. Got it. All right. The Metropolitan Museum, 10,000 visitors a day.
Wow.
In the last month, I've been to a sold-out concert at MSG, a Knicks playoff game at MSG, also sold out. And what else did I do recently that I don't think you were able to do? I keep seeing signs that the city has come back. I know we're not 100%, but is this the worst call you've ever seen? Pretty much invalidated within a year? I don't know. What do you think?
I reposted it when you posted it. I love it.
Were you like,
hilarious.
Were you like, this is real?
You don't post that much on Instagram, but I saw that one, and this is.
Yeah.
Oh yeah, you curse on here. I was gonna say this is bullshit, but maybe
Total
I should.
bullshit.
Jerry took care of it.
What's that?
Jerry Seinfeld answered.
Yeah, can we pull up his
answered-
response? I
answered
would
the
like to
call.
see that.
He was basically like, the world is tough enough without some asshole on LinkedIn shedding tears for something that's
LinkedIn.
going to be totally fine.
I had not written in a long time. That was one of the few blog posts I actually wrote during the pandemic. It was like NYC made. I'm just like, this is absolute crap. I came up here in debt, and people like say, oh, you did what your dad did. Yeah, I came up here, I sold my car, shipped 4 boxes, bought a $600 mattress at Sleepy, found a random Craigslist roommate, moved to Murray Hill.
Only in New York, kids.
October 2008, Lehman collapsed the day I got off the airplane. Come on, man. New York City ain't dead.
It has bounced
Stop
back
it.
faster than I actually thought that it was going to. In the middle of COVID, I was thinking like 3 years or something.
From
but-
the ashes, the Phoenix
But
rises.
not
Come
just
on.
bounce
Crazy.
back. When you tell me that the village is filled with 20-year-olds again, it hasn't been like that in 20 years. But that actually is what the city needed.
Yeah.
It needed a lot of the old blood to go to Florida already, and young people be able to afford to be here.
If Rio ain't packed on a Thursday,
Rio.
in Murray Hill, then we got problems.
I was a Joshua Tree guy
Okay.
back in the day.